The market's obviously up 35 points right now, and largely on this belief that even with 11 out of the last 13 days, the Dow being down, the fact of the matter is it's all of 2% away from its highs back on March 1st. So the markets seem to be holding their own, convinced that they will see big tax cuts. What if they're not big? What if they just start out with corporate tax cuts, and then will the markets be okay with that? That they got, you know, a lot of what they wanted, just not the individual tax rates? To former Bush 41 Economic Policy Director Todd Buchholz. Todd, what do you think of that?
Well, I think the market would be quite fine if we had the business tax cuts. I think, quite interestingly, Neil, we spent a lot of time worried about how will we pay for tax cuts. I would argue that the wonderful rally we've had in the market, whether you want to call it 10, 15, 16%, has in part already paid for tax cuts, because every time someone buys or sells shares and there's a gain, there's a transaction fee, a tax that goes to the government.
You know, so that's a very good point. You know, that's an excellent point. The markets might have done a lot of the financing for you.
Well, that's right, Neil. I'm here to make excellent points for your show. I mean, I'm not here just to gossip about things.
Here's why I disagree with you, but you're the expert, and that I don't know if the markets would be okay with just corporate tax relief if the individual rates aren't addressed, because I think the flip side is that a lot of those folks who trade stocks and invest on behalf of people, they want a tax cut for themselves, don't they?
Well, the fact is, if you really are concerned about, if you are concerned about the very wealthy, they do benefit largely from the stronger equity market.
Absolutely.
And if corporate taxes are lower, that certainly gets embedded in higher stock prices. And also, if it's business taxes, if it applies not just to corporations, but to proprietors and LLCs and the like, then many of the more affluent people obviously benefit, get income in that form.
But it's not comprehensive tax reform. By that definition, I mean, you don't see something sweeping or 1986 Reagan light. And I think the run-up, I mean, the only way you can explain a run-up like this is that expectations, we get that. If we don't, I don't know.
Well, look, right now we see that President Trump is not someone who can snap his fingers or tweet and automatically get things done. It's quite a struggle. So this may be a piecemeal approach, but I do think it's very important for the markets and for investors that the President and the Congress, especially Republicans Congress, demonstrate that they will at least do something about the anti-competitive effects of our corporate tax system. As you know, our corporate tax rates are much higher than our trade competitors. And what's ironic about this, Neil, is if you recall, during the 1990s, all our trade competitors in Europe and Asia laughed at Ronald Reagan, said that Reaganomics was just a flim-flam, charlatan talk. And yet, in the 1990s, they realized, oh my gosh, Reagan was right, and they slashed taxes, so their corporate taxes are far lower than ours, and we better catch up.
Interesting. All right, Todd, very good seeing you again. Todd Buchholz.
Great to be with you.